Okay, guys, here's a CPA guide just for the DCAA compliance. And this is mainly for my accountants and my tax professionals. This is basically for those accountants who have government contractors as clients and they don't know what DCAA is. This is kind of a rundown of what you need to be doing, things you need to look for, and just kind of get updated to what that client is going through. So this mainly is talking to my accountants here. And you can use it too if you're a government contractor and you want to be more familiar with the DCAA. So what is it, right? We can simply just read it here, but what I'm going to do, I'm going to put it in simple terms for you, just so you can digest it a little bit better. But the Defense Contract Audit Agency oversees audits for the Department of Defense, DoD, and ensures that basically these contractors comply with federal regulations. So let's be honest, guys. Anytime you're working with the government, there's going to be a set of rules that you adhere to make sure everybody's playing by the same rules. That's what's going on here. There's a certain way we need to do our books, and there's certain ways we need to calculate our cost, our expenses, and our income. Why is it important? Is because if your books aren't DCAA compliant, or if your business isn't DCAA compliant, it basically runs risk for you to lose on our money, delay any contracts, and also you get penalties too as well. So you're gonna have to pay more money for these penalties. So that's basically what it is. So, and let's talk about understanding FAR and CAS, right? So when you see the Federal Acquisition Regulations and Cost Accounting Standard, these are just like rule books. No different if you're playing a sport, no different if you're, I don't know, I just use sport, for example. There's a set of rules that you have to go by. Cost accounting, we're talking cost accounting first. Cost accounting is basically how you need to allocate some of your expenses and income. It's very project based. So if you're like a food truck, or maybe you're like a law firm, you don't really need to do cost accounting. You don't need to track your labor hours, track your materials, and other expenses. You can basically just do regular GAAP accounting, not really worry about the accrual basis of anything of that nature. You don't really have to track all that. When it comes to cost accounting, we need to track each government project from the income and the expenses for each project. It has to be allocated for each contract, right? It needs to be that much into detail. This requires a higher degree of accounting. It's not your simple accounting where everything's just lumped under to one account. Everything has to be detailed and broken up to certain projects, right? So it's a certain way you need to do that rather than just linking every bank account to QuickBooks and recording everything that comes in. It's completely different, right? So it's a set of rules on how you need to do accounting. And the reason why the FAR requires you to do this, they want everybody accounting for the expense the same. Everything has to be accounted the same way. Right. And then federal acquisition regulation, if you're a CPA and you don't know those set of rules, this will help you understand what FAR and the government and the US government is requiring you to do. Right. That's what you report to, the FAR regulations. Right. That honestly needs to be one of the first things that you read through to see how does my books need to be done. For example, you may do cash basis for a majority of your clients. Under FAR, it requires you to do accrual. These are things you got to know, right? So understanding FAR and CAS can be helpful on how to basically structure your books for your government contractor. So this next slide is basically talking about common DCAA audits. These are audits that you may come across when you're dealing with the DoD. The most common ones that I see is pre-award audits and post-award audits. These are basically making sure that your accounting system matched what is needed for the FAR regulations, right? You have the correct accounting system in order to meet the requirements for the contracting jobs, right? That's one of the most popular ones. Incurred cost audits and floor price audits are two additional ones too as well. But for this main topic, this is like a beginner's level. Be aware of the pre-award audits. Basically, they won't even issue you the award or the contract if they see that your accounting system does not meet the standards that they're looking for. And basically what they want to see not just, I'm using QuickBooks for example, because it's the most popular one. They want to see that your time system is connected to QuickBooks and that your labor hours on each contract or each type of job type is being calculated and pulled into your QuickBooks software, and is also allocated for that project. They also want to see that your chart of accounts is broken up between direct materials and also indirect, right? Direct versus indirect. They want to see that too as well, right? So, and your timesheets must be connected to your accounting system along with your payroll, like I was saying at the beginning. That's what a good accounting system is. So once all those are connecting and they're talking to each other, they actually want to see your SOPs too. How does this work? How do you know that the timesheets are correctly being drugged into the QuickBooks software? They want all this documented. They want a set and systematic way on how you do your accounting system. So it's more than just having QuickBooks. It's actually making sure that all the correct softwares and third-party apps are connected to that software and they're all talking in the same manner, right? That makes a healthy accounting system. But these are just some simple common audits that you may come across. The main takeaway from this slide is you may not get awarded an audit if your accounting system, a contract, if your accounting system isn't up to standard, right? So be aware of that pre-award audits, because you would hate to put in a bid, go through all that pain and headache, and then at the end of the day, you're not able to win a contract due to your accounting system not being compliant, right? So keep an eye out for that one. This next slide is kind of going over those key requirements of what I was talking about as far as the third-party apps being connected to the QuickBooks. Let's go over the adequate accounting system. Direct and indirect costs must be separated and it must be tracked on that contract line item. You can't just loop all your expenses under one account. It has to be broken up per that contract line item, and also it has to be separated between direct and indirect costs. When you think of direct costs, think of the labor, the materials, the time spent directly on fulfilling that contract needs, versus indirect, which may be your rent, that like you're paying for that for every contract, no matter what. Your rent is your rent, or maybe your admin. Your admin touches different aspects of each, of each one of your contracts. So that is indirect, right? Then your internal controls. You must have strong systems. This is what I was talking about when it comes to tracking your SOPs or writing your SOPs. Your timekeeping, the way you go about your job types, and also your expense allocation has to be documented. They need to know what you consider direct and what you consider indirect outside of just a normal definition, right? Because each business is different. And once again, this is kind of just saying the same thing: direct, indirect, and then also unallowable costs must be clearly segregated, right? They cannot be combined into one account. They need to be broken up in such. This is why the books for government contractors are completely different than books for like a food truck. Food truck, you don't really care about direct, indirect, or unallowable costs. They don't adhere to a third party. They don't really go under audits as much as my government contractors do. So these are just some key requirements to look for. Make sure that this is not just in place, but it's also documented, just so when your auditors come in, they can easily read and move on to the next task. And speaking of what the auditors are looking for, this is what I want you to keep in mind. They are looking for if you're consistent, if you have your documentations, and if you're timekeeping, which is just another form of documentation. But let's talk about consistency. Even if you're wrong on something, I want you to document what you consider direct versus indirect. Because if you're wrong, I just want you to be consistently wrong. Therefore, the auditors can come in. They're not looking to beat up on you. They're looking to make those adjustments so we can basically move on to position you to win this contract in the war. They're not looking to basically, do any harm to you. So if you're wrong, I just need you to be consistently wrong. Let an auditor or a CPA come and correct it. But don't basically be inconsistent with how you're recording things. If you're recording your admin by mistake and you're classifying it as direct cost, consistently do it. It's not going to be correct, but consistently do it. Your auditors are going to come in and fix it later. Granted, I will want you to go get a CPA who knows what they're looking for, just so they can make sure your books are done properly. But if that's not the case and you're doing this by yourself, I would rather you be consistently wrong than you just putting different things and being inconsistent with your recording. right? Because then it's just more of a headache and it's harder to fix. Secondly, I want you to document your process, your accounting system, as far as what accounting system you're using, what payroll system you're using, and how you get all those to talk to each other and basically connect to each other when it comes to software, your integrations, to make sure everything's being calculated accordingly, right? And then timekeeping. So in government contracting, especially if you're a very labor-intensive job, contract, I mean, you want to make sure you have some timekeeping system put in place to track the work type and also the project type, so we can allocate this cost to the contract for you, because you may have 5 different contracts you're working on. We need to make sure that we're allocating each labor cost correctly, and a way for us to do that is having proper timekeeping records, right? So have a good payroll system, T-sheets mixed with payroll or Paycom or Paychex. Some of those are similar payroll software, so you can't do no wrong by picking either one of those, but make sure you have something good put in place. So this next part here, just some of the common thing that's wrong with government contractors books is they don't have any documentation. I don't care if you're a business that just started off, or you're a business that's been in the business for 10 years and you're making 20 plus million. The majority of the time, the failure to maintain those records kills my government contractors every time with these audits. You need to be able to prove and tie things back to everything. Ways of doing that is documenting everything that you have going on with your accounting system, right? And how you bill clients, how you bill the government. You want to have every supporting document. The next part is basically mixing expenses. So if you are incorrectly recording things, just do it consistently. Because if you start mixing your direct with indirect costs, you're going to basically just screw up the whole thing, and you're going to create a bigger mess. So my first recommendation would be make sure you have an accountant that knows this stuff, so you can avoid it from the jump. But if you're winging this and doing it by yourself, don't be mixing direct and indirect cost, right? I gave you an example earlier in the presentation of what direct and indirect cost is. Let's just try to keep those separate, right? Try to keep those separate. And then also, one of the things that I see too as well is because it's usually new and this is the first time a business is setting this up, they don't have any timekeeping practices. They're selling contractors. They're not really keeping adequate times. So, get a timekeeping system. T-sheets is one of the most popular ones out there. Use T-sheets, link it to your payroll your payroll software, and get into practice of accounting for your time. Get a system going on how your workers are going to account for their time, clock in, clock out, and it shows up on your accounting system, your QuickBooks, or whatever system you're using. Steps to ensure DCAA compliance. You want to make sure you have a compliance software. It doesn't mean it's not one particular software you can buy and it's like, oh, I bought it, that means it's compliance. You have to build that software up to be compliant. Once again, you have to build that software to be DCAA compliant. That software needs to connect to your payroll, your timesheets, and then also any other third-party app that you're using to account for some special requirement that you have tying back into the contract. Right? The list goes on with that one. Then you also want to regularly review your internal controls, your SOPs. And your SOPs are your standard operating procedures, how you're calculating your timesheets. You want that as an SOP. You need that as an SOP. Just so there's basically one sound, one mission, one band. That's what SOP is. It's a set of rules that basically helps you do whatever XYZ from step 1 to step 10 and to completion. You want to make sure there's SOPs for everything that you have going, not just your accounting system. And then most importantly, you want to train your admin staff on how to make sure we're being DCAA compliant and complying with the rules too as well. So that's basically reworking the SOPs, fixing any kinks or bugs that may be through that first draft of SOPs, right? So that's what you want to do to make sure we comply with this DCAA compliance. So this next part, I want to talk about more of the CPA roles on what they need to be doing to help the client achieve compliance. It could be through the eyes of you're already doing the books, but they're undergoing an audit. That CPA needs to help with the audit preparation. gathering up all the documentations, responding to the auditor's request, and having everything set up in a file where it's easier on everybody. Easier on the audits, easier on the client, and most importantly, easier on yourself too as well. And that comes from just assuring that the documents are ready. Training and advisory. You need to be going to these DCAA compliance meetings that they're having. They have them monthly. You need to understand what they're talking about, how their lingo, what are they looking for. So you need to go to some type of training and advisory to make sure you're staying up to date on your training. And then you need to know about the cost allocation guideline, simple cost accounting. You need to understand how to break up direct versus indirect, and you also need to understand what is and what isn't an unallowable cost. That will help you too as well. So that kind of concludes what the DCAA compliance is. This is kind of a rough guideline, but this is, once again, this is for my CPAs and accountants out there who just need a brief overview on what to look for, how to get started, especially if you have a government contractor accounting. Thank you.